is called Why Don't London's Luxury Hotels Make Any Money? And in this article, properties such as the Savoy, Dorchester Hotel, Claridge's, among others, have reported multi-million pound pre-tax losses for 2024. And major redevelopment or refurbishment works were considered as a major attribute to this financial performance. I've also pulled some key takeaways from a second article on your screens here. What hotel investors think about CapEx in 2025? And my three key learnings are that industry studies show that traditional reserve levels no longer work. Inflation, rising construction costs, and aging assets have doubled what hotels must set aside to stay competitive. So we're now looking at about 8% of revenue for CapEx spend, and for FF&E around 15 to 25% reserves. Second key highlight is that years of delayed property improvement plans or PIPs have left many hotels outdated and struggling to compete. So hotels are now being forced into tough choices. Invest heavily now or possibly sell at a disadvantage. And my third key learning from that article is that the renovation strategy is now ROI driven. So capital is being focused where it has the most impact. So think your guest rooms, your F&B, and there is a trend towards faster renovations rather than phased upgrades. Here are some headlines. Last week, we saw the Labour Party provide their autumn budget for the UK, and some measures have been announced that will have some implications for hotel capex and refurbishment timing. So, firstly, operating costs are squeezing renovation budgets. So, business rates relief does help smaller hotels, but higher rates on large properties and frozen tax thresholds will reduce cash flow, and rising labour costs are going to tighten what's available for CapEx. Also in the UK budget, new tax allowances, so a 40% first year allowance rewards upfront investment. So that's giving owners an incentive to accelerate their refurbishment plans. There is a reduced writing down allowance that means that we'll start to see more careful planning to help maximise those returns. And over in the US, tariffs continue to inflate FF&E and construction materials, but there is less volatility now, so hotels can predict more accurately for renovation budgeting. Operators, again, just speaking about the US here, operators are focusing capital on asset optimization. So repositioning, refurbishing, renovating existing hotels as opposed to expanding their footprint. And hotels in the US are also shifting towards domestic sourcing or nearshoring or life cycle extension programs. And they are accepting slightly higher costs if it guarantees that reliability. So I hope that gives you a flavour of why we're here and what's been happening in the market. So let me ask my speakers now to introduce themselves. They could do a much better job of it than I could. And I'll move from left to right as per the PowerPoint screen. So let's kick off with Thierry. Over to you and welcome.
Thank you very much for having me on this panel. My name is Thierry Widmer and I am part of the asset management team at Cedar Capital Partners. We buy and refurbish hotels exclusively, focused on the lifestyle and luxury segments, and we currently have a portfolio of 17 assets across Europe and the US, with most of them being operational and as well as some under development. Just recently, I've been involved in several hotel refurbishments, most notably the £85 million upgrade that we did to the Belfry Resort, the recent opening of the Hoxton in Edinburgh, as well as a smaller renovation project on Hotel Villa Honeck in Switzerland, which, being Swiss, is very close to my heart. So thank you for having me on.
Thank you, Thierry. And Lucas, over to you. Welcome.
Yes, thank you very much, Eloise. My name is Lucas Johansson. So I'm the CEO of IHA Management. We're a white label management, the hotel management company, boutique in the sense that we also operate, it's just a smaller number of hotels and not a very large number. We focus on independently owned properties. Um, Predominantly in Central Europe and Northern Europe. And although you spend a little bit of time delivering a lot of fantastic news for the UK market, would like to expand into the UK market as well, and we'll looking into that as well. So we are also in the middle of several different projects, both renovations and conversions and constructions. So it's an exciting time for hotel industry as a whole and for us. Thank you for having me.
Oh, you're welcome, and happy to help both of you in your hotel projects. In fact, all of you, all of our speakers today. That's what we're here for. Jake, welcome. Over to you.
Thank you. Thanks for inviting me to this panel. So I'm the founder of Envisage Interiors, and we're a team that offers turnkey fit out and refurbishment to hotels, right from design through to fully furnished rooms. We run through a slightly market disrupting methodology called trusted value design, where the costs drive the design rather than the other way around, sistered, as I call it, with project management excellence. And what we're aiming to do is get projects over the line much faster and for lower overall costs than the traditional procurement methods. Thanks for having me today.
Thanks, Jake. And I'm sure we're going to hear more about that methodology later on in today's conversation. And last but by no means least, Tatiana, over to you.
Hi, my name is Tatiana, and I'm owner of Chapi Design. It's an interior design company who's focusing on luxury hospitality in the yachts. So we're located in Canada, Toronto. However, our project is around the world, international. We are focusing on new build, but it's also focusing on renovation. So that topic is quite exciting for me, and thank you for having me.
Thank you very much. So all the LinkedIn profiles of our speakers are in the chat. I do encourage you all to connect, maybe even fire off your own private questions should you wish to. But again, we are here to have an open forum discussion. So just reminding everyone, if you have any questions for our panel, do submit these live. So let's kick off. I'll come to Tatiana. Let's stay with you for a moment here. Because you work closely with independent luxury hotel owners at different stages of that design process, so be it either new build or renovations. How does the timing of you working with said owners affect your view on whether a renovation fits the current guest needs and market?
Well, when the ownership decided to renovate the hotel, there is several factors typically they would like to achieve. Either number one, the hotel is very profitable, but this needs to have refreshments. Maybe some items get damaged, and the hotel obviously needs to refreshment. But the hotel is profitable. There is a lot of occupancy. Number two, when the hotel is not profitable, and in this case, they kind of desperately need to have a renovation based on the marketing research, what is the competition is currently right now, and etc. And third, hotel is profitable, everything is great. However, the design is a little bit outdated. So just to stay in the market, that's kind of important also for ownership to start renovation. Especially renovation typically takes 2-3 years, right from the moment you start to get engaged. So it's very important for ownership and for designer as myself to understand what kind of approach we will do for the renovation. So it's actually will be relevant 2-3 years from now, and it will be relevant for the next 10 years. Because it's important for my size to design timeless design. That's for me is very important, and for my team rather than to have a trend, because when you design something timeless, so that will last you for the next during the renovation for 2-3 years, but it's also will last you for the next 10 years. You're absolutely right. You started the topic, so just coming back, that it's a lot of right now factors that ownership has to consider. Obviously, the tariffs, right? The timing, the shipment time, and that started during the COVID, and it's kind of still going on. What is a shipment? What is a lead time? What is a production time? So I think it's from the beginning of the stage of the project, it's very crucial to understand what is our goals. Not only obviously the ownership goals, but how I can help from my side to achieve these goals. And that's a very important from the beginning. And I just mentioned what are we facing? If the hotel is profitable and we just changing, for example, some furnishings or some, I don't know, the washroom innovation that is actually damaged, that's a little bit easier process and less financial impact because we can recycle some of the items. For example, we don't have to replace everything. We can replace only certain parts. Because a hotel is profit occupation is 85% and plus, that's an easy mark. When a hotel is not profitable, that's when the ownership started to face in it, how much I'm willing to invest. And my impact is very important as from the beginning, house and the end. In the beginning, for me, it's very crucial to understand what is the budget. What is the budget for this project and how we are going to achieve that budget? Is it we investing more in, if we are talking about the rooms, are we investing more to the rooms to the headboard or are we investing more to the, for example, minibar because the minibars start to get outdated? Was it a feedback from their guests? That's a crucial. So I don't know if I answer your question, but my role is important how I start the project and until the end, if we are doing some kind of adjustments to the items that we are going to specify. So the most important to actually to understand what is the budget and be mindful towards that.
Thanks, Tatiana. Lucas, I'd like to bring you in because same question to you, but obviously from a slightly different perspective on the operational side. How does the timing affect your view on, how a renovation performs in terms of meeting those guest needs, looking at the market conditions? What's your view?
No, thank you. I think we obviously come a little bit from a different perspective, like you said, Eloise, but often very as well before Tatiana, for example, would become involved with the properties that we have, whether it is construction or conversion. That's obviously a longer time period. We need to do a very good business plan and business analysis on what is required for that new property to come onto the market. Or if we just do a renovation for a property that perhaps hasn't renovated much in the past or needs to meet the current needs and standards, we try to look a few years ahead to see where are the trends going, where are the guest needs going to be, what are people looking for in the next 2 to 3, 4 years. And I joined Tatiana when she was saying that we've had some obviously complex few years behind us with a very poor or zero cash flow in many cases with the COVID period when disruptions in the distribution and deliveries. But when we were pre-COVID, we had already some plans on in our trends what we expected that people were looking for, and as we came out of COVID, actually that's just got even reinforced and heightened. So the plans that we had expected for the properties and the projects that we were working on actually just got even increased. So we were landing very well post-COVID in what the guests required and they were looking for and the guest needs. So timing is really, really important, but it's really important to try to stay ahead of the trend and really look forward to see what is it that the guest will need and ask for in the next 2 to 3 years. And very often it turns out that what we expect them to need, and they don't really know that themselves yet, but that's also a part of being very close to the market, close to our guests, reading a lot of different analysis and articles like you just mentioned, and just finding what is right for that particular market that stands out from the competition in that market. But The trend that we see in general moving forward is it's very positive in the sense of finding a new sense of belonging in that area and discovering something new and just finding new locations and work and not necessarily going to the old that they've been 3, 4, 5 times, but want to be somewhere new, and then also have a connection in the design in that area so that it tells a full holistic story of that property. So we often end up with a lot of discussions with the ownership on where to go, what budget, what best returns we can offer, where it's best invested, that we can get the quickest return on it, so that we can also then roll in that into further investments and continue delivering on the cash flow that is being delivered on property.
Thanks, Lucas. Jake, curious to hear your thoughts on this now, because both Tatiana and Lucas have kind of touched on anticipating guest needs. What are the budgets? Are we just, fixing damaged items, or are we fully sort of gutting and replacing? Could it be operational efficiencies? What are those early signals that tell you when a hotel is approaching a critical renovate or wait moment?
Yes, thank you, Eloise. So sadly, and it is sadly, it's actually driven by Tatiana's point number 2, if I may reference back to that, and that is it's hotels that aren't making a profit. So it does come down to that, and it's simply 3 things, isn't it? It's your room rates, it's your occupancy, and it's your operating costs. And certainly in the playing field where we play, that's when we get involved. And again, even more sadly, I think it's often where hotels get driven to a point where something fairly major has to happen. So you get in this awful sort of down loop spiral where the rooms need refurb, but there's not enough in the P&L to do that refurb. So the room rates come down, the occupancy comes down, and there's even less on the P&L to do that refurb. So you kind of got an inevitable point where the position of the hotel has to change. It sells out to a bigger group or something, and then there's some capex funds that come in to do that renovation and possibly and probably actually reposition the hotel to something that's more appropriate for the place where it is. So one thing you can't do with hotels is move them from where they are. So, where a hotel is the first thing about, what is the right value to actually invest in that hotel in terms of what's going to be the best result. So a good renovation has to move at least one of those numbers on the dial. Ideally, it moves all 3. It reduces operating costs, which can be through, energy efficiency or something, or new technology, and it must drive up the occupancy and the room rates.
Brilliant. Thanks, Jake. Thierry, I touched on in my context slides, for instance, that in the US we're seeing that there's a greater trend towards working with what's already existing, be it repositioning to Jake's point, as opposed to expanding portfolios and buying new. And I'm just curious, with that in mind, when you are evaluating an asset, how do you determine whether market conditions justify going ahead with a renovation versus biding your time and waiting until the conditions are more favourable?
Sure. I think by virtue of Cedar Capital Partners being a value-add investor, evaluating the market conditions for refurbishment is a key consideration in our due diligence during an acquisition process. From all the assets that I can think of that we acquired recently, all of them actually went through a refurbishment within 1 or 2 years post-acquisition. The biggest factor we of course consider is market demand, and if I may touch on one of our recent projects with the Belfry, it would be the addition of 150 bedrooms as well as a very large meetings and events facility as well as a leisure centre, and that was essentially driven by market demand that wasn't satisfied. So at the time of acquisition in 2022, we looked back and we actually saw that the hotel had unsatisfied M&E demand in the sphere of about £40 million each year, and seeing that demand in the market and putting that against sort of the supply that we see coming into the market and the existing the existing portfolio or the existing properties in the market, we saw a big gap, and now we are able to, service large M&E business that we weren't before, and that was what ticked the box for this capex investment. Another consideration that we of course have to factor in when thinking about timing is the debt piece, specifically what financing is available to support us in the investment. And I'm certain that if we step back 3 years and think about the mini budget catastrophe that we had in the UK, I'm sure many hotel owners that hadn't locked in financing at fixed interest rates had to go back to the drawing board, and I'm sure they came to the conclusion that now was not the right time to push forward with a renovation. I think for us at Cedar, we have an average holding period of 3 to 5 years, and our investments are often also driven by exit proceeds, which rely on stabilized income. And this is rather simplified, but I think the earlier we do a refurbishment, the more accretive it will be to returns in the long term, with the caveat of the financing that I just mentioned. And that would be very different for a core investor that relies on stable income and might opt to do lighter refurbs, and can also finance these out of operating cash flow, hoping that the asset is profitable.
Staying with you a moment, Thierry, you just kind of touched on sort of the debt financing angle, and you look at macroeconomic pressures such as interest rates, and then other factors such as supply chain delays. How are you seeing the sort of wider market influence the timing and the scope of hotel renovations? What's your thought process behind this?
Sure. I think I'll leave the piece on kind of the supply chain issues to my colleagues, because they will be much better placed to answer that. I think if we touch on one issue, which is geopolitical stability specifically, I think that's one to forecast it's difficult to forecast it. I would argue that nowadays we are in an environment that geopolitically is not as stable as it was 10 years ago. And I think the point that I would like to make is that if hotels are reliable on specific feeder markets, it can really affect timing and scope of certain hotel renovations, simply because the falling away of that demand leads to negative cash flow. So, for example, in some of our assets, we've seen lower travel from, call it, Israel and Russia over the last couple of years. And whilst we were able to replace those pieces of business, I'm sure that there are certain hotels in the market that have taken heavy hits on operational cash flow, and therefore had to pause renovations, or at least rescope them to a later time.
One of the headlines that I saw in research in preparation for this webinar, I believe there was a Wynn Resorts property. I think it might have been in Vegas, but as a result of various factors, they've had to push pause on their 300+ million renovation project for all the points that you've highlighted there, Thierry. Curious to hear thoughts from either Tatiana or perhaps Jake here on the supply side as to what you guys are seeing. How are these pressures now, affecting your work in terms of timing and what you're going to see moving forwards? Tatiana?
So, I have a good example, because I got contracted to do luxury hotel in Miami. It's a big hotel, it's 500 room and branded residences, just literally a year ago. And during this process, as we know, the world changed, how Thierry mentioned, so everything get upside down. So wherever was budget dedicated a year ago, it's obviously has to change. So what we faced during the process, that even though the purchasing agent prepared this budget, it has to obviously change. And the purchasing agent was coming back to the suppliers and asking them to kind of cover the cost of the tariffs in a way, and that came from the good relationship. If their ownership has a great relationship and they have been supportive for this supplier, whatever it is, coming from the fabrics or case goods. So what they're asking to cover either 100% tariffs or 50-50 or even wherever it's good, 75 and 25%. So that's what I saw. And obviously the scope of work changed during this process. So we started with much bigger scope of work for renovation of the hotel, and we changed it. But that particular property have been very profitable and full occupancy during a year, 85-90%, but it's Miami. And in fact, I'm actually going later this week to put the last touches on the accessories. And obviously that's a fact. I just received another project for the renovation in Canada, local, and it's also more than 500 rooms. And that's renovation. It must be because the hotel is profitable, but not as much if they wanted to. So they are facing right now going to the locals. So that's what we discuss. So mostly going to the local suppliers, to the local manufacturers, and even local materials as much as we can. So that's what we are facing. But just coming back, renovate or not renovate. If the hotel location is great, it's profitable. However, there is this new build hotel is coming. For example, if you're on the Ritz-Carlton and the Four Seasons is coming right next to the door. So I think that's what ownership conversation has to start, right? Should we renovate? Because as Terry mentioned, the time is very crucial. Time is money for the renovation, especially. So if this hotel is full occupancy and you are starting to renovate, you are suffering for the next 2-3 years. So it's very crucial not only facing this, like how much budget, but it's also understandable, again, time is money, to hire someone who is very efficient. So who will design for you very fast, but it's also all the suppliers who can produce and deliver also very fast. So it's like a full components from everybody. So renovation doesn't take 3-4 years, take only 2 years. And that's obviously important. Yeah.
Thanks, Tatiana. Jake, curious to come to you next, please, to look at the inefficiencies that you see in the way that owners manage the tenders for hotel refurbishments. Can you elaborate for me?
Yeah, well, you're touching a nerve, as you might know. So, I think we're very clear. We believe that the traditional tender route of procurement is out of date, inefficient, and quite honestly not fit for purpose. If you look at it, it was a classic case, and we all know this. We all know a project that's done this, and unfortunately, it's the rule, not not an exception. There are exceptions to the rule, but it's a rule that tenders involve huge amounts of upfront work, huge amounts of upfront costs, and you're getting to a point where you finally can issue out, a very, very detailed tender pack, and then all 3 or however many tenders you get come back in late and wildly over budget, and then you have to go back in and effectively start again with some kind of value engineering process. So when you finally get to deliver a project, you've got this kind of perfect storm of nobody being very happy. Usually the design's been value engineered to a point where it's, the designer's not particularly happy. Usually it's still 10 or 15% over the original budget that the investor wanted, even though it's been VE'd. And often the contractor's not particularly happy because they've been screwed down to a kind of level where they're not really sure they want to carry the job out anyway. So you've got all 3 major stakeholders going into what is a really important sort of piece in the life of this property, and nobody's really very happy about it. So as I say, the trusted value methodology just turns it on its head and said, we're going to get the costs on the table first. We're going to get all the stakeholders around. We're all grown up, so we all want to deliver this project really well, and we all know what the end game is going to be. Let's, whether it's the architects, the interior designers, the investors, local council, whoever might have a serious interest in this, and say, what is this property? Where is this property is the first thing, because you're not going to invest as much in Preston, if you take a UK, as you are in Oxford. What is it going to be? Who's the guests ultimately going to use it? And that will determine the right value of investment to put into it. Once we've got that and all the key stakeholders trust that value and we believe it's deliverable, affordable, and we'll actually get what we want at the end, then we start designing and we deliver a renovation that will absolutely meet that requirement. So the tender process is not working. It's really not. Somebody will bring up something where they say, well, it did work on that one, but everybody knows in the construction industry generally, it's like, oh, that's the construction industry. That's the construction industry for you. Well, why? That's what we're challenging. It doesn't have to be. There are different ways of doing it, basically. Sorry, that's my sort of slight bit of off-piste rant for this webinar. Just because I believe it. I believe it.
You touched on a point there, Jake, that at some point somewhere someone's going to be not upset, but maybe uncomfortable or unhappy with the process or where the design currently sits due to whatever constraints. So when you are dealing with projects that are over budget, what are you observing when it comes to those trade-offs between the design, the quality, the cost? How is that being managed?
I can only speak from what we do, I'm afraid. I'm not trying to advertise ourselves, but it's a question of being really smart about your design. I mean, these are quite obvious things that my colleagues on the panel here will know this, especially Tatiana. But, what you do in the bedrooms is really, really crucial because that's times 500 if it's a 500 refurb. What you do in the public areas is much less important, and you can make some real impact in the public areas that wouldn't have the same impact in the rooms, or certainly not on every guest. Every guest comes through the public areas. Every guest doesn't stay at every room. And then it's the touch points. It's making sure the key things in your rooms are absolutely right. And I'm not talking about necessarily the really high level hotels that Tatiana's been doing, but we're often working for people that really they're wanting to present their property as something higher than it really is in terms of what they've invested in it. So we're always looking for really smart ways of making it feel like it costs more than it really did. You've got to have a good bed and mattress, absolutely. You've got to have a good shower, absolutely. We think that striking headboards and striking window dressing is really important, which don't really cost. They're not really expensive items, but there's a whole lot of other things that the guests just don't. You're never going to get complaints about. I often use the analogy of a rug. You take a rug, you can spend £80 on a rug, and you can spend £8,000 on a rug. Neither of them is the right number, but somewhere down there, I just don't think I've ever had a hotel tell me that the guests have complained about the rug. So that's all those points. You've got to do it line by line by line by line, basically, and be really smart about the way you do it.
Mm-hmm. I might bring Tatiana. Go on.
Sometimes what we do, for example, internally, if everybody transparent on the table and tell, hey, this is how much money we have for this is how much money we have for that from the beginning, that's actually making my job much easier. And I appreciate when ownership or brand tells me upfront and very honest. And the second point, for example, sometimes it's not necessarily you design this sofa and you have a stretcher in the middle. But if you move, you have to sit down with fabricators who will be doing this for you. And if you tell them, hey, if we move this stretcher a little bit farther, how much I will save? It's not necessarily sacrifice the design, but that will make an impact. And that's if that stretcher will be $50, but multiplied by 300, that is already your savings. And I'm actually encourage the vendors, encourage the fabricators, ownership and the brand to sit down on a round table before we will go into DD stage where we want to invest the money. And I'm here obviously to help because everybody has a budget and the ownership knows typically better, obviously, than me, what needs to be done for this property, especially for the renovation. They did the research, they spoke with general manager, they understand what the complaint from the guests, and let's invest this money where it's more complaint from the guests. For example, if one of the property which we are doing, they didn't renovate for 20 years, only because the property was doing so well. However, obviously design is outdated, but the simple things like more is the technology, like the blinds, it's manual, let's change it to the neutral system. That's where the investments will go, not necessarily aesthetics all the time, more as a function operational point of view. Yes, I would like to actually change the aesthetic, but what is more crucial? What is more important? And obviously, from my standpoint, from my team standpoint, we are here to help.
You, on the operational side, I know Lucas has been waiting rather patiently, so I'm going to bring him in here because one of the trends that we're seeing, and I think it builds on what Tatiana was just saying, is that there's a shift of metrics now. It's no longer just RevPAR, it's total revenue per square foot, of which, when it comes to the renovations, refurbishments, and sort of maximizing your spaces, plays a huge part of that. And sort of feeding into this is the timing. And Lucas, I'm curious to hear your thoughts here around phasing and budgeting strategies and trying to minimize disruption, or as much disruption as possible. What have you learned during that process?
Yeah, I think that, I mean, I'm a generally
Hi, how
I'm
you
a firm
doing?
believer. Sorry.
Yeah, just wanted bit of a
Oh, please carry on, Lucas.
Oh, sorry. Yes, we are. I mean, I'm a firm believer in general of phasing rather than doing big investments. I mean, when it comes down to structural changes and structural, let's call it the DNA of the building, of course, that requires some major impact work that maybe can and cannot be well planned in advance, depending on what that impact is. However, I think that most hotels have some sort of level of seasonality built into over a year or over 2 years, and it's obviously really important to plan well ahead. Medium to long term, to plan in when is the right time to put investments into a certain area. I think that Jake touched on it before. Doing bedrooms. I mean, that's if you have we operate in the luxury market, in the upscale luxury market. So our hotels are usually between, let's say, 80 to 200 to 210 rooms, not much larger than that. And when you have properties that size, you can always do 10, 20, 30 rooms, scale off an area, protect that and isolate it in the process. And you can put focus on that, where we know we get the best financial returns in terms of return on investment. At the same time, when you do an impact on the ground floor public areas, when you renovate a restaurant or bring out a new concept where you have arguably a shorter lifespan, when you come up with a new concept for a bar or a restaurant, we know that it only lasts for a few years before it needs to be renewed again. It has a larger impact on the general feel for the guests, but it can't be treated as a vacuum, even though with the profitability in restaurants are lower. We can't be treated as a vacuum because it changes the overall feeling of the guests in the hotel. So I think it's a question of finding the right seasonality, the right phasing, when you do the budgets for the next year or 2 years, to plan well in advance to make sure that there's the least amount of disruption. In general, we would recommend that, of course, when everything comes down to generating cash and having at least, it's the cheapest way to invest, to use your own cash rather than getting finances from outside. Obviously, then you're also less exposed to market implications like interest rates or whatever that might be. So that way it's also quite easier to do a 2, 3, 4, 5 year planning in terms of renovations of the property. And as we know that many owners, because they have to change the pipes in the building or that might be, it's going to be very hard for us to get a good return on investment on that. It's not something that we can sell to our guests that we have brand new pipes in the walls, but we obviously want to rather put that into the FF&E in the guest facing area, which I'm sure that Tatiana will agree with me on. That's where we want the bulk of the money to go, where we can get the most return as well. But it's really important that the maintenance of the building is obviously being protected as well.
So when you are looking at the phased renovation, is that I know you've highlighted a couple of different key considerations there, but I think rooms was one. You mentioned that if you've got lots of rooms, it's easier to kind of take a section, corner it off, do it up, and move on. So is keys a big contributing factor to when to phase that renovation as opposed to a full-scale overhaul? Like what's your thought process going into this? And how are you actually deciding which areas to prioritize? Are you looking at traveler trends and where guests use certain amount of spaces? Is it footfall and understanding where guests move around the hotel? Like what is it that you are researching in order to put those plans in place?
I think it's generally habits and what drives, like you said, the guests, where they spend time, their habits in the bedrooms, whether that is, I think that in the past you had to have, I mean, I think it was one of the conditions, you had to have a desk, it had to be a desk, there had to be a bed, a lamp to that desk. And I think that as we move, of course, for a corporate hotel, maybe that is the case, but more and more people also working in the public areas is spending time in co-working environments, where if we can offer something like that in one of our, in our public areas, that might actually be more suitable than sitting and spending a lot of time in an area consolidated around a work desk where a business traveler perhaps spend less time today than they did 15, 20 years ago. So I think that in general, it's looking at the different areas where the habits are, what people are needing. I mean, sleep habits has become extremely important. That's something that we place a lot of efforts into, making sure that no disruptions to the sleep. The basic thing is you need to have the comfortable bed, yes, but you also don't want to have any noise from outside or lights flashing in your eyes from the telephone or the AC unit or the right duvets that can breathe properly depending on the climate control in the room. So I think there's a lot of factors that go into that. We do believe that for the bedroom investments, 8 to 10 years, that's probably usually good. You need to have a projection for 8 to 10 years because, and I think that Jake mentioned it, when you do 200 to 500 times, it's a big investment, it's a big cost. And when it comes down to restaurants and bars, it might be a lot shorter because that concept will only be alive for 3, 4, 5 years. But also the investment is smaller and can be fixed with a few touch-up or changes that might not require a big complete overhaul. So when we on the projects that we're working on right now, we spend a lot of time on understanding how the guests behave, what they're looking for, how they want to interact with other guests and the local environment, the local community. So putting a lot of efforts into how they use the public area space as well, of course, as the bedrooms, and make sure that there is, that product is going to be live for the next 4, 5, 6 years as well as a restaurant or as a bar.
It's a tough job to be a hotelier, isn't it? When you've got these discerning travelers who think they know what they want and you're trying to anticipate whilst also trying to predict what's going to happen down the line. I mean, what a cracking job you're all doing, I have to say. Thierry, I'd like to come to you for a moment, just to looking at the financing side. And I think Lucas made a joke here about plumbing, for instance, and I've heard horror stories of when a renovation has started and unfortunately something crops up at some point, something will go wrong inevitably. So with that in mind, Thierry, what would be your advice for optimizing that financing strategy for your renovation capex, and how are you accounting for those hidden costs?
Sure. I think there's two aspects to this. So the first of them is I think diligent planning and smart phasing of the whole project. I think Lucas has already touched on some of the points. but then also having the knowledge and experience in-house so that you can, hold the stakeholders that you work with on these renovation projects to account, but also to foresee some of the unexpected costs that, as you say, Eloise, will eventually crop up. So at Cedar, we have a dedicated CapEx team that has got a multidisciplinary background, from fit outs to construction to interior design, and they've worked across jurisdictions in Europe, and they bring in that valuable expertise. And then it's surely about knowing the right project managers, the designers, consultants that you can rely on to deliver on a commitment, on a joint commitment. So this is about, first of all, a relationship piece. I think Tatiana has already alluded to it when we talked about the tariffs, and being diligent in the first place, to foresee any of these hidden costs that may pop up. But if I can think of a specific example on one of our recent refurbishments, and the way that we dealt with unexpected costs was that we faced so-called nice-to-haves of the projects towards the end, and what that allowed us to do is really to deliver on the big milestones of a project, de-risk them, being able to release contingencies that we have set aside for these bigger cost portions, and then at the end deliver kind of the not mission critical items, let's call them that, at the end. And if anything would have creeped up in the meantime, I'm sure that we would have all sat together and maybe we would have to rescope in the end. And we've also made the experience of one of our general contractors going bankrupt. There's always a rest risk, and there's ways to mitigate that. I'm thinking of, for example, performance bonds, which are a good method, but it's just part of the game as well.
Thank you. I am conscious of time, and there's two key topics that I really want to touch on before we finish. One is sustainability and the other is success. So let's touch on the sustainability piece for a moment. I'll come to Jake first, and then I'll come to Tatiana, if I may. Looking at how sustainability requirements in the current day is influencing design choices, CapEx allocation. What are you seeing in your line of work?
Thank you. Okay, well, we'll go at pace, keep the time up together. So,
thank you.
Of course, it's influencing it massively. I think the massive one is energy. So when we're doing a renovation, improving the efficiency of the building is absolutely critical. It's also really, really important when you're doing renovations. It's just as important what you don't do as what you do. And partly because of the area where we work in, which tends to be more the boutique, high-end hotel type of property, you can really bring out the sort of character of the existing building. So you don't just need to be stripping everything out and starting again. You can really look at what's there and see how you can enhance it, how you can use it, how you can upcycle it. We're great believers in upcycling products. Using local suppliers, which Tatiana's touched on, I think is absolutely great as well. And I really think that the sort of the desire for travelers to actually know they've stayed in a locality and that's reflected in hotels is actually an increasing thing. So they're not just seeing the same corporate room in one city as they are in another city. They're actually got some kind of feeling that they actually visited a location. And I think, again, to borrow one from Tatiana, I think timeless design actually is extremely sustainable as well. So you're not designing something that's going to have to be replaced or redone in a short period of time. The other thing to be wary of is the supply market in terms of how many, especially FF&E, and how many products are available at low cost on the internet through the sort of bigger supply chains available to hotel owners that look like they're hotel quality, but they're not. And you're buying a product that's basically built to be replaced, and that's not sustainable either. So I do think we should be investing in proper quality products that will actually last in that environment.
Tatiana, We are on the clock, but your thoughts, please.
Well, my family and I, we are personally very sustainable. So I truly believe that everything comes from the family. I have been driving electrical car forever and ever. We obviously, Canada is very sustainable. In general, we recycle. Coming back for hotel, I wish it could be more progressed. I wish. And I would say it's all driven by the budget. I wish all the manufacturers develop some kind of a new innovation so the sustainable materials will be low cost, so the ownership can afford that. It's not like a ownership against that. It's just a price. Like everybody has a budget, and I totally understand that. And that's, I think, it's a key element. From my side, I'm doing a luxury hotels, so we obviously specify natural stone, natural woods. So I have been doing it for years and years. Right now on the markets, I specify for one of my hotels for 140 rooms. We used carpet, which 80% was wool and 20% was recyclable. It's made of the plastic bottles that was collected in the ocean. We try to do that. I always do, especially for the renovation, right? When you're renovating, where's all of this old furniture goes? Right? Where's all of this coffee machine goes? Where's all of this bedding, mattresses goes? That's the most important. So for me, I don't like trends. I hate this word trends. I'm sorry to be very straightforward. I always design what is timeless. And I mentioned it before, and Jake mentioned, and I mentioned it again. Please, designers, design something which is last not only for a period of time of 2 years when you're renovating. Design that it lasts for 10, 15 years. Because after that, when you renovate again, you have a lot of wastage for all of that. And I think it has to be collective collaboration from everybody, from designers, from ownership, from vendor, from the suppliers. It's coming. It's not at upscale as we wish, all what we wish, but it's coming. It's coming, and I think if someone will invent something from a sustainable material and it's on the budget, that will be win-win for everybody. Thank you.
Thanks, Tatiana. And I'm going to, a final question to Lucas, if I may. It's about success and measuring success. I think Jake highlighted room rates, occupancy, and a reduction in operating cost as sort of three pillars as to what renovations tap into. But Lucas, what's your measure for success?
At the end of the day, of course, is the net promoter score. What are our guests saying at the end of the day? So if they are happy, they come, they feel good, they go back and they talk about that, and then we start driving repeat business and great word of mouth. So I think that is a measure of success. And of course, the end story to that is just the operational profit going up, but also the efficiencies and the feedback from our hosts, our employees, when what they are saying, what is working. As we know, in terms of operations, it's the salaries, the payroll that is the highest. So we need to be very efficient in how we renovate. We need to be very efficient in how we set up our properties, and they are the best ones to tell us when it's working and not working. So we need to just listen, put the ear to the ground, and hear what comes back, and that's really how we can measure it best.
Brilliant. Thank you all. And we are still in time. So huge thank you to Lucas, to Tatiana, to Thierry and Jake for their insights and contributions. What we are going to do is leave this webinar open right at the end for an extra couple of minutes, just to allow our audience members to follow up on any of the links that we've popped into the chat today, including the LinkedIn profiles of our speakers. There's lots today that we didn't quite have time to get through, so please connect, ask your questions, and carry on that conversation, because it's clearly a very popular one. So just some closing slides to run through. Tatiana, block your ears, but I am hosting a trends webinar. And I am going to be hosting that webinar on the 8th of December, so a week today at 2 p.m. GMT, in which I'm going to be highlighting my 5 key trends that I believe are going to shape the hotel sector next year. Would love to have you all there. The link to register has been popped into the chat. And if you're interested in working with us, either across our webinars such as these or perhaps our in-person events, do get in touch with my colleague Katie. Her details are on your screen and also popped into the chat. So a huge thank you to everyone that has tuned in today. Thank you once again to our fantastic speakers. Thank you to Duetto for their continued support. Really looking forward to seeing you guys for the final webinar of 2025, which is happening next week on the 8th of December. So take care, folks, and I'll see you all next week. Bye now.
Bye.
At IHM, we believe in the power of connection. We exist to inspire, to inform, and to unite decision makers who are shaping the future of hospitality and real estate. Our why is simple. We believe this industry thrives when people and ideas come together. And we're here to make that happen. So how do we do it? We publish 4 leading multimedia brands, each a trusted voice in its sector. We blend intelligent content, curated events, and a strong community into everything we do, making it easy, accessible, and genuinely useful. From online engagement to face-to-face connection, we are known for being insightful, collaborative, and refreshingly human. We host world-class events, panel discussions, podcasts, award ceremonies, and webinars designed to spark ideas, drive conversation, and create impact. With over 62,000 monthly web visitors, 55,000 email subscribers, and 69,000 social media connections. Our reach is deep and our community is active. We're partnered with the biggest names in hospitality, and we'd love to connect with you. So whether you're looking to grow your visibility, meet the right people, or understand where the market's heading, read, watch, listen, and me. Do it all with IHM.
It is called Why Don't London's Luxury Hotels Make Any Money? And in this article, properties such as the Savoy, Dorchester Hotel, Claridge's, among others, have reported multi-million pound pre-tax losses for 2024. And major redevelopment or refurbishment works were considered as a major attribute to this financial performance. I've also pulled some key takeaways from a second article on your screens here. What hotel investors think about CapEx in 2025. And my 3 key learnings are that industry studies show that traditional reserve levels no longer work. Inflation, rising construction costs, and aging assets have doubled what hotels must set aside to stay competitive. So we're now looking at about 8% of revenue for CapEx spend, and for FF&E around 15 to 25% reserves. Second key highlight is that years of delayed property improvement plans or PIPs have left many hotels outdated and struggling to compete. So hotels are now being forced into tough choices. Invest heavily now or possibly sell at a disadvantage. And my third key learning from that article is that the renovation strategy is now ROI driven. So capital is being focused where it has the most impact. So think your guest rooms, your F&B, and there is a trend towards faster renovations rather than phased upgrades. Here are some headlines. Last week, we saw the Labour Party provide their autumn budget for the UK, and some measures have been announced that will have some implications for hotel capex and refurbishment timing. So Firstly, operating costs are squeezing renovation budgets. So business rates relief does help smaller hotels, but higher rates on large properties and frozen tax thresholds will reduce cash flow, and rising labour costs are going to tighten what's available for capex. Also in the UK budget, new tax allowances, so a 40% first year allowance rewards upfront investment. So that's giving owners an incentive to accelerate their refurbishment plans. There is a reduced writing down allowance that means that we'll start to see more careful planning to help maximise those returns. And over in the US, tariffs continue to inflate FF&E and construction materials, but there is less volatility now, so hotels can predict more accurately for renovation budgeting. Operators, again, just speaking about the US here, operators are focusing capital on asset optimization. So repositioning, refurbishing, renovating existing hotels as opposed to expanding their footprint. And hotels are in the US are also shifting towards domestic sourcing or nearshoring or life cycle extension programs, and they are accepting slightly higher costs if it guarantees that reliability. So I hope that gives you a flavour of why we're here and what's been happening in the market. So let me ask my speakers now to introduce themselves. They could do a much better job of it than I could. And I'll move from left to right as per the PowerPoint screen. So let's kick off with Thierry. Over to you and welcome.
Thank you very much for having me on this panel. My name is Thierry Widmer and I am part of the asset management team at Cedar Capital Partners. We buy and refurbish hotels exclusively, focused on the lifestyle and luxury segments, and we currently have a portfolio of 17 assets across Europe and the US, with most of them being operational and as well as some under development. Just recently, I've been involved in several hotel refurbishments, most notably the £85 million upgrade